While everybody has been talking about the Epstein files all week, and for some reason tech CEOs enjoying Coldplay concerts, the biggest news again is coming from the world of crypto as we saw the Genius Act pass. This is touted to be the most consequential financial legislation since Dodd-Frank. Also, as part of the White House's Crypto Week, Trump said he's going to open up the $9 trillion U.S. retirement market to crypto investments, which is absolutely huge. Now, I'm as excited as you guys are. I've actually been drinking since Wednesday to celebrate, and the good news don't stop flowing in, but I'm going to be a bit of the broken record and wet blanket here, warning once again that when hype reaches excess levels and we start hearing everybody saying that the market can never go down again, we should be on alert and quietly exiting and making vacation plans for the forthcoming bear market. We're not there yet, but we need to keep our head out the window. If we move on from crypto, the financial sector broadly showed strength in earnings reports this week, but still sold off, indicating that the sector was priced to perfection. However, most names are well on their way to recovering from the dip already. The same was true for Netflix, reporting robust earnings, but then seeing a sell-off, reflecting investors' ultra-high expectations. Now, broader tech earnings are starting in 2 weeks, and that's going to tell us a lot about the state of markets. And to round out notable events of the week, Uber partnered with Lucid Motors to develop their own robotaxi competitor. Apparently, the CEO was looking to find some kind of infinite money pit, and this partnership was the next best thing. So we have a lot to look at on the charts, and a ton of the names that we've been tracking have made massive moves this week. Let's go. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Welcome back to the Trading Apologist. My name is Tom, and I hope you all had a good week despite the whipsawing of markets on all the aforementioned news events. Before we dive in, if you do find value in the content, please like, comment, or subscribe below. Helps the content get out there to more people, and it gives me the validation that my fragile ego so desperately craves. Before we discuss markets, we need to take a moment to talk about the Genius Act passing. We saw the dollar strengthen throughout the week on the idea of that passing, and bonds fell. Why is that, and what impact does stablecoin legislation have on U.S. Treasuries and the dollar? Well, a major part of the framework is that banks issuing stablecoins will need to buy U.S. Treasuries to back the stablecoins they issue. This provides a perpetual domestic bid to U.S. Treasuries, which have had a harder time finding international buyers as of late, and in turn strengthens the dollar as a reserve asset. Now watch out for a flood of banks entering the space in the weeks and months ahead. Looking to markets, we saw another all-time high weekly close on the S&P 500. We gapped up into the open today. Despite a day that was marked mostly by selling, markets did rally into the end of the session to close just above our recent consolidation range, which to me is looking bullish for next week. I would have liked to see bulls step in a bit more with their buying into the close, but as Frank from the IA community reminded me with his email signature today, experience is what you get when you don't get what you want. Frank, I hope that's okay that I shared that, but I just love that little proverb you have in your email signature. So is the buying going to continue? Well, many charts are overheated, but remember that daily and weekly RSI can stay overbought for quite some time, and prices can often keep climbing up as RSI cools off already. So be careful in the weeks ahead, but also don't get out too soon. Now, I don't have a crystal ball, but I would be eyeing late August or early September as a seasonal period for weakness that could give us a reset for another run in the fall. Despite this being crypto week here in the US, I'm going to save the majority of crypto charts for Monday's video as I'm really waiting for a weekly close to get a better read on near-term setups. But if you're following the assets we discuss here, it was a very exciting week, and a lot of the names we've been tracking experienced major breakouts, so congratulations to you if you were on any of those. There are also some interesting setups for the week ahead that we need to cover, and a few more chart requests that came in from you guys that I'll cover at the end, so let's get right into the charts. Starting here on the S&P 500, and we have our breakout level into new all-time highs from about 2.5 weeks ago at 6150. And you can see we grinded up past that and really have spent the majority of our time the last 2 weeks trading between 6200 and 6300. And we had that gap up open on Tuesday into the 6,300 plus territory, had a sell-off, which you might think is not good, but we closed the gap, so we're not leaving anything open. Then recovered Wednesday, Thursday, had another gap up open today in all-time high territory, sold off, and then the buyers stepped in a little bit into the close to give us this good daily candle close here, about even with Thursday's candle. So new all-time high weekly close, and closing in this new range is setting us up, I think, for just a continued grind higher for now, and I'm expecting more bullish price action, although I think we're just going to chop around and consolidate and grind up for a bit before we have any kind of real explosive move. If we look at the NASDAQ briefly, this was our break into all-time highs here at 22,250, and we have been consolidating here as well, but grinding slightly higher in this channel. Some folks might say that, oh, channels like this eventually reverse and are bearish price patterns, which can be true, but you could also argue that this is a bull flag and a continuation pattern, just like this here was a flag and continuation pattern. So there is more strength in the NASDAQ in the tech names. We've really been seeing fintech, semiconductors, AI plays lead the way, and that is reflected here. And we just need to keep our eye on this to see if we break the range low. That might be foreshadowing a bit more of a pullback for a little bit of time, but right now things are generally looking strong to me. We haven't talked about HSI in a while, but there is a lot of strength coming back into Chinese stocks and a ton of stimulus, and you can see that we are near making all-time highs here for the HSI, and that's been reflected in certain names like BABA that moved up to 20% in the last week, or just a little over a week. So there is a lot of movement there. I would encourage you just to look at some of the Chinese stock names to look for opportunities. I don't have time to get into all of them here, but it's a sector to pay attention to in the near term. Now, one of the strongest sectors has been SMH, the semiconductors, and the good thing about this run, we're in all-time highs, and we have this underside support line from the April 7th lows that is just giving us a bit of a lead on the market. If we break down from this, I'm not saying there's going to be a huge correction, but just like we had this daily RSI breakdown indicating a bit of consolidation and loss of momentum, this will give you an early lead of some momentum coming out of the semiconductor space. And I don't know how long that is going to be, but usually after a move like this, you'll eventually find a period of some daily and weekly consolidation. And if you're in these names, that might be a time where if you're trading, you would consider rotating those profits out into something that hasn't run yet. If we look at one of the leading names in the space, TSM, you can see we had a beautiful breakout into all-time highs and just a absolutely perfect back test. And this has a similar trend line that you can draw in to watch this space. We had a wonderful gap up here on earnings and then a bit of a retracement, actually more of a retracement than the broader space today on Friday, more than NVIDIA. And we pretty much closed that gap. We still have one gap open down here that sometimes gets filled, but right now TSM is looking fairly strong and you have that trend line to watch, and things in blue sky breakouts can often run a bit more than you would anticipate. Moving on to NVIDIA, you can see we're also in all-time highs, and just like with the other two, we have a wonderful underside trend line to watch that could act as support if we correct and bounce into that. And we also had that breakout into all-time highs a little over a week ago with a nice back test as well. And we are almost to that $175 price target that we discussed for NVIDIA on the breakout. So the question is, if we tag this, what are the next levels overhead that we could expect this stock to maybe hit? And I think we have to be careful with this one because while it still can keep moving, it's now a $4 trillion company, and this is not going to double in value in the near term. So in terms of trading and investments, this isn't one that I'm really playing in as much right now, although I believe in what they're doing and I think the company is still going to see a lot of growth. It's not going to do a 1 or a 2 or a 3x in the near term. It's impossible. So that's why we identify some of these smaller cap names that have great fundamentals and growth potential and are also playing on a current narrative. So we're almost at that 175. If we look overhead, the next target I would have is 187.50 for an extension move. And then beyond that, the next real target would be about $250. We might see some resistance as well at the psychological $200 level. But honestly, this next level at $250 would be such a stretch. What would we be at size-wise then? Like a $6 trillion company? That is hard for me to imagine in the near term, but I'm happy to be proven wrong. I would anticipate if we blow past this, really that 187 to maybe the psychological $200 level would be the most we would see in the near term before some cool off and consolidation. I'm not going to cover oil, gold, and silver because they haven't been doing too much, and also the DXY, it's just had a bit of a recovery for the last week and a half, but there's not much interesting to look at on that chart. Just broadly looking at Bitcoin here, you can see we obviously had that big move up, and now we're in a tightening range, consolidating, potentially reaccumulating, and we've been closing our daily candles above that 117,400. And if we can continue to see daily candles close above that, I think we have a better chance of testing higher prices sooner than later. If we start closing daily candles below that, I think we're going to need just a little bit more time to build that base and grind around until we can go higher later on. But my money, just looking at past breakout runs, would be that this should break out within the next week or so. And the only thing I suppose that gives me a little bit of pause is we had all these positive crypto news this week. And sometimes when you have all that hype and all the great news land at once, it can sometimes mark a local top. But just letting price action lead right now, it is looking like strong consolidation. And my money would be on a continued move up sooner than later, testing the mid 120K range. Then we have the even 130K number, and the ultimate target for this extension for me before some consolidation is 136K. Looking at Solana on the daily, Solana has actually been moving stronger than Bitcoin in terms of its move up. And right now, even though the daily chart and the 4-hour are very overextended, I'm hoping that we see a move to test that 195 to the psychological $200 range. The reason I'm saying that is if this is going to be a continued uptrend, we want to see this next swing surpass these previous highs. And right now, we have not yet done that. This is obviously our most traded zone in this area of price action. So this is going to give us a little bit of a hurdle, but the Solana price overhaul has been strong, and I wouldn't be surprised to see one more thrust up into this range before we chop around and hopefully attempt to break through down the line a little bit. And one area that you can just draw on the chart as some underside support is we have a very clear underside support here connecting all these candles on Solana. A lot of you sometimes ask, why don't you take this bottom candle wick? Well, sometimes in crypto, these extreme moves at the top and the bottom just don't make sense. They don't line up with areas of support. And if you draw to those, imagine I'm drawing to this one, to the next point, it just doesn't align with price action. So that's what the book says. But if you implement some street smarts and just say, that was an extreme situation and the price action seems to align and really find support, if I go with the next candle wick after that extreme bottom, fear bottom, or that blow off top, sometimes I can get a cleaner read on my trend line. So I apply this only to crypto. But if we look at the Bitcoin Solana chart, which I mentioned a few weeks ago, it has continued to break in the favor of Solana after we broke this downtrend. And you might say, oh, that's not a big shift. But just 4 days ago, it took 739 Solana to buy one Bitcoin. And today, it only takes 666 Solana to buy one Bitcoin. So if you are swapping between your assets and rotating, perhaps when you see a breakdown like this, some of your Bitcoin into Solana, that can give you a huge increase in your overall bag, just swapping assets you're already holding. Moving on to MicroStrategy, let's talk about it because today was a disappointing day for MicroStrategy holders. Yes, Bitcoin was a little bit weak, but not weak enough to justify a candle like this. But it was pretty clear in the charts that Michael Saylor was hitting an ATM offering to generate cash to buy more Bitcoin. That is most likely what we saw right here. And right now we are into the breakout of that cup and handle neckline, as well as our support at that $420 level. So we really want to see this bounce at the beginning of next week. And our ultimate price target for this breakout is still that $620 to $630 range. But we're looking for that bounce to continue. This cup and handle pattern can still be valid if we break below it. You don't want to break the handle of the cup, but if we go into this moving average support and then continue away next week, that's perfectly acceptable. Doesn't invalidate the pattern. I would just, for a sign of strength, love to see us bounce here at that 420. But as we said in the intro, you don't always get what you want. Moving on to Tesla, which is still in the middle of this wedge pattern, and I just turned off the confluence model to clean things up a little bit. And actually, I'll take off this trend line too from the last uptrend, and you can see how uptrends are just great indicators like we were talking about on the NVIDIA charts and the TSM chart and all that for the semiconductors. Once these break down, it isn't always going to be a move like this, but these trend lines can just give you a leading indicator of momentum coming out of a move. But right now, Tesla is tightening up. Our charts are a bit overextended. We have this local overhead resistance at that 332, which you can see we really battled with a few weeks ago. But if we can break through this, then I imagine we're going to go back up to test the top of the wedge, which right now would be at about 347 to, let's say, I don't know, 345, depending on when we intersect that. So just keep watching Tesla. They have had some positive news, and it feels like momentum is starting to build a bit. So I would anticipate a test of the wedge at the top, and then maybe one more bit of consolidation before we break this one way or the other. And a pattern like this is very uncertain, but Jacob Invests, if you guys follow him, he posted a wonderful chart that has a great projection for the future of Tesla stock. So I hope that's helpful. Moving on to the MicroStrategy Tesla pair trade, there was a flip this morning from MicroStrategy to Tesla, so I hope you took that. I actually hesitated a little bit because I was thinking, gosh, what if Bitcoin runs over the weekend and MicroStrategy opens higher on Monday? But over time, as I've followed this chart, just going with the trend and acting on that trend flip and trusting it and not analyzing the individual stocks too closely has proven to be the best method. And, you know, perhaps I did this flip and we do get that gap open and I have to flip back at a similar level or maybe even slightly higher next week. That's fine. I'm okay doing that because I think that risk is outweighed by the reward of flipping when the trend model is telling you to do so. Moving on to Hood, this and Coin saw new all-time highs this week on the back of all the crypto legislation. We are now up 10 weeks in a row, so this move is quite overextended, but we could still hit these near-term targets around that 117. I was actually thinking 115. I don't know why that line's off. And I don't know why I have this alert here at 125, but if we have an ultimate extension target and the market goes absolutely crazy in the fall, I am targeting an extension here at $170 for Hood, but I don't think we're going to get there right now. This move is getting very overextended. And the thing I fear, these candles are starting to get larger and move up at a quicker clip. We could see a blow off top forming for this. I really would rather see some consolidation and then a more gradual stair-stepping move up to higher price targets, as that is more sustainable. And a blow off top on any of these names would bring the stock crashing back down much quicker, as we saw with MicroStrategy at the end of last year. Moving on to Coin, which has also had a crazy week. So we passed last week that previous price target around 370. And our ultimate price target for this bull run, which I thought wouldn't happen till the fall, at 440, 444, we actually hit that to the cent today before pulling back throughout the day and into the close of the week. But it is just amazing to me how these price and time extensions can play out so accurately to this cent. And now we've overextended in time, getting there much more quickly. We have matched price. I imagine we also go a little bit higher to overextend in price. But this move right here is not going to last forever. If you're not in this, please don't chase the hype of these names, because you can just see the clip that this is moving up and it can come back to earth really quickly. Sure, there's a chance it can keep running, but it is not a safe entry right now. So please be careful. Don't chase these names. But the real story this week is Bull, that we talked about a bit over a week already, because we started seeing strength come back into the charts. And this is what we talk about when we say that certain narratives have momentum. And obviously on the IPO, this thing went crazy and shot up to, almost $80 and then came back down to earth to $10. So it was terrible for people who got stuck up here. They just lost a ton. But we got into it because it was forming this solid base, and then we made a higher low right here. This is where I started paying attention. And then we made a higher high, and then we started consolidating right here. Let me make this a little bigger so you can see. Right above our breakout range of these previous swing tops, and we found support on those twice. And when we made that double bottom, we just started rocketing away. And now this was on news today of more crypto services coming to the platform. And you can see how the market reacted quite positively to that today, moving up over 17%. You can see in after hours, actually, there was a sell-off after hours, which isn't reflected here, that was down almost 13% and then closed somewhere around the high $15 range. But that happened because it was Friday, not much liquidity, and someone was doing massive profit taking, and there weren't any buyers to step in. And as soon as it crashed the price, they stopped their selling. So watch this one on Monday. But overall, I think the structure still looks good. And, we're not going to go up in a straight line, but if judging by the momentum of Hood and Coinbase is any indication, this actually could pick up some steam in the near term. In terms of near-term price targets, I've got that 1944 marked out, so just below $20. And it would be great for us to at least get up there on this next move before we pull back. So something like this, because then we would be exceeding this previous peak. And then I imagine that next bit of price action, because this fell so quickly, we could cut through a bit faster. My next price target overhead would be 24.68, which is almost at this 382 fib level, and then that $29 to $30, and I won't go much past that. And just in case you're wondering, for this 50% retracement, why I'm drawing it here and not to the blow off top, if we go to the 4 hour, I'm drawing it to this pivot top right here. So I'm just accounting for this last drop, because this blow off price action right here for 4 days just throws things off too much. I mean, you could draw the fib levels for that too, but I'm just choosing to pay attention to this range because this was our dead cat bounce, and then I'm going off that drop. This isn't totally perfect, but there's not much price action for this, so I'm using a bit of discretion. If we move on to HIMS, I am still targeting that $56 level, but the one thing that I'm just watching a bit cautiously is this rising wedge. Rising wedges have a tendency to break bearish more often than they break bullish, and we had this little fake out. When was that? On Friday. Actually, that was today with the broader market sell-off, and then we got back within the range. So right now I'm considering that a fake out, but I'm keeping my eyes on this. Hopefully we get that move up, but if it breaks down, I think we just need to be ready for that scenario. And as I mentioned in the past on this, stocks that have big drops like this and then get a nice bounce, sometimes they will have one more drop to find their ultimate base, and I would put that around where I have this dotted line here at 35.84, where the 200-day moving average is, if that were to happen. And that would come on the back of some sort of bad news. And I imagine there would be an irrational reaction because there's already fear in this stock. It oversold, 15% loss in revenue and a 35% sell-off don't add up, just don't jive. That's why we should get back here to that 56 range. And they also expanded with new weight loss drugs into Canada. But if some kind of bad news comes in, we just need to be ready for that scenario. And that would be a wonderful value zone to buy on a fear bottom like that. Moving on to PLTR, which broke into new all-time highs again. This thing just does not stop moving. And we had those two big shorts we talked about a couple of weeks ago, and we saw some selling and weakness in the stock based off that, but just bounced off the moving average support here on the Confluence Model Cloud and has continued to climb into new all-time highs. And now what is ultra bullish for this, we have this overhead trend line that has been playing resistance. And normally you would anticipate that we continue to reject from this. It's actually very rare to see a stock break through, and it's actually an excessive sign of strength. So we did close just above that line. Watch this to see if it's a confirmed breakout next week. If on a scale like this, I like to see 3 daily candle closes above a breakout zone like this, but this could indicate some kind of further acceleration and perhaps a blow off top for Palantir. And I don't mean in terms of the end of the move, but if we just extend this out a little bit and make some projections, say we have, a retest and then we have some crazy move, I could just see the stock coming back down and riding a line like this now from the overside, and that playing underside support for the future price action of this asset. Okay, one we have to cover that we haven't touched on for a couple of weeks since we bought at the breakout is OKLO. And if you recall, we had this falling wedge with our price target here just above all-time highs at just under $75. And we bought at that breakout and it has been up nicely. I did sell my call options earlier this week because they were expiring today. And I think I got out on this candle here. They were still up nicely, but this is a lesson learned for me to give my call options, these short-term call options, just a little bit more time. Even if I think it's going to be an aggressive move, it would have been nice to capitalize on this and let the options increase in value a little bit more. Of course, I don't know what's going to happen. So profits are profits, but I'm still holding my spot and seeing where this move can take us onto OKLO into hopefully new all-time high territory. And then we are in a bit of price discovery from there. Okay, I don't have time to get into all the treasury plays today, but I just wanted to cover UPXI because this was one that we recently got into here in the $2 range, and it has just rocketed away to close this gap. And I actually sold today near the highs, and I'm glad I did because of this pullback. My options didn't expire until September, but both my spot and my options were very nicely in profit. And we were getting into this previous support zone right here. And I was just imagining that that would play some resistance. Of course, we can overshoot that and we can run a bit higher, but the trajectory of this has just been a little bit quick for me. The daily still has room to run. So I might be leaving a lot on the table, but I just know these treasury plays are volatile. And for me, the options and my spot, which was up 250+% just on the spot. So you can imagine where the options contracts was a good enough win. And if this pulls back, I would consider re-entering just because the daily still has room to run. And I am just holding on to 1,000 remaining shares just to see what it can do. But in a couple of weeks to go from $2 up to almost $9, I sold out at $8 something, $8.70, $8.60 is not too bad. And one other thing I'll just say about this setup, some of you might be saying, well, gosh, the daily still has room to run. You could be leaving profits on the table. But this is the difference between an investment and a trading mindset. I got more than the return I was hoping for from this trade. And because this is a risky name and we're into resistance, I'm de-risking and I'm locking in those profits because I don't want to sit through a pullback, especially on those options contracts. So I might be leaving stuff on the table, but that's absolutely okay for my strategy. And if I'm lucky, we get a little pullback maybe into the 50% of this move, assuming that is our top, back to the high $5 range. Perhaps we pull back into there or into the 382 level here at $6.30 and I get a chance to reload. But anyway, that's the mentality shift. There's always another opportunity. I made great gains on this one, so now I'm looking for other opportunities to move assets into. And the next stock I'll cover, I actually moved some of these profits into this stock because it hasn't really run yet. Okay, so this is ATAI, and we got into this one just a few days ago on this pullback because we made a slightly higher high here, and then we were assuming this was a higher low, and we also had that support of this previous peak right here. So that was just a few days ago, and today we broke out, and as we broke these previous highs, I had sold my UPXI position. I moved some of my profits over here. This is a very small position. This is a very risky play. I just want to preface that. This is in the psychedelic space, and so some of you might not even be into this, but in terms of identifying sectors and narratives, that's a big part of my investing strategy is finding sectors that have momentum behind them. So we saw in 2017, 2018, the cannabis sector ran like crazy when there was talk of decriminalization on the federal level. And that has still continued to be volatile on news events. But now there is a lot of momentum behind this space in terms of making it legal for therapies for PTSD and other disorders to use these psychedelic substances. And ATAI is one of the three names I've been watching, and I liked the chart the best. And because of this basing structure that it was making, we had a very clear base here at $1. So it's already up 300% from that price range, but this could run a lot further. With these, my mentality is it could all go to zero. I'm just keeping the assets in here, and the position is so small that it doesn't matter to me if this stock goes to nothing. But it does have high upside potential. And if we look at where it came from at its IPO, this was initially valued at an IPO price of $22. So I'm not saying it gets back up there, but just to give you some picture of the history of this asset, and if they do change some laws, a sector like this could really run, and we're just seeing the start of that right now. Another one we identified about a week and a half ago, I think it was a week and a half ago, was RGTI on this wedge that we were scouting. I actually bought my first little bit here on this breakout of the wedge, which then faked back in, and then I had more limit orders set here. But then as we started coming back up to the edge of the wedge, I built into my position. And here's a lesson as to why it's important to watch volume. I deployed a little bit more on this gap up open that we had on Wednesday. And the reason is you saw that overnight trading and demand. And so that's telling you that folks who know something are getting in to build a position. And then as we opened, you could also see the volume increasing to levels that it hadn't increased to in quite some time. And we had a massive move away on RGTI. This was 26% over the last couple of days. And we have two patterns here. We have this wedge with this ultimate target up here at $31. And then we also have this cup and handle pattern right here. And thank you to Indizavel from the IA community. I hope I'm pronouncing your username correctly for pointing that out. I was so focused on the wedge pattern that I didn't even see that cup and handle, but it's a beautiful cup and handle. So we have our neckline there, and the price target for that would be at that 2370, which actually is a fib extension level. And we have a fib extension level right up here at that $31 for the wedge pattern. So when I'm drawing these patterns and you get confluence with a fib extension level, that is always just an extra checkbox to assure you that you're seeing these patterns and measuring out the price targets appropriately. Okay, quick update on SOFI, which I mentioned I was getting into a riskier position. This is playing a potential blow off top forming on this asset, which once we had this gap up open, and we also confirmed there's a massive weekly cup and handle here with a target up at that $30 range, which I know sounds crazy for this stock, especially considering how much it's already run since our April 7th bottom. But I am still in this. The trade is profitable as of right now. We had a pullback today, and I'm just waiting to see if this can form that kind of blow off top that we've been looking for. No guarantees. This is not the, let's say, safest kind of play. So again, small position sizing, a bit riskier of an entry, but so far it's playing out well. Okay, and one last chart I want to mention, not as something that I'm trading, but just as an example of a chart setup that I heard someone online bring up, and this is Flow Foods. They, I think, make packaged baked goods, and I'm here on the weekly, and this is not the kind of stock I'm interested in because this is the weekly chart, and it's taken years for this to fall from $30 all the way down to $15. So yes, a 50% retracement, but to get a bounce on an asset like this would take a long time. And what they were looking at, which makes a lot of sense, is that we have this support cutting right through here that we are potentially bouncing off of right now. And your invalidation would be if we break below, let's see, these wicks down here and these previous peaks. So you're into key support, and maybe you want to watch this play out so you're not risking as much. But assuming you're entering right now, this is technically a good risk to reward trade because your risk to the downside, I think, is like 15%. No, only 5% actually that you're risking to the downside there to that invalidation. And then you have 95% to the upside. So really good risk to reward, but not the kind of sector I'm interested in playing in because it's not disruptive, it doesn't move fast. And packaged baked goods, well, I would suggest that they maybe saw a spike in growth. Gosh, look, this move up. This was from 2016 to a peak in 2022. So yeah, a 100% gain, but over all those years, I mean, playing out for 6 years there, that's just longer than I would want to take a trade. But I think it's a great example to look at regardless, just in terms of a great setup for a swing trade if this was playing out over a smaller time frame and was an asset that we could get into with more conviction, because you have a clear invalidation zone. You're buying into support on very oversold charts, and you know very quickly if these levels don't hold, you're incorrect and you should stop out of the trade, and it's got more to fall. So good risk to reward, clear invalidation. That's what you're looking for with any of these swing trades as you're looking at other charts. Moving on to the requests, and the first one is CRWV, which actually I got into a little bit of a long position a couple of days ago. They had a drop on the daily at a fire breaking out at one of their facilities. So to me, that was an overhyped fear event. And we did bounce from there, but it's continued to drop away. And so right now, I'm just from this IPO and the move up, I'm looking to that 50% level for support here at $110. If we go to the daily and we look at that $110, also lines up with all this consolidation right there. I'll also turn on the VRVP just so we can get a feel for that. And that does align with our next volume cluster. We're just starting to get into that support right now, which also is the top of that trading range. So we might not drop all the way to that 50%, but where we are right now between that 122 to that $110 range, I would say is a good value zone. And sometimes on big retracements like this, there is a chance you can go all the way back to the 382 here, which would have us at $92. But I would start getting a little bit nervous if we break these lows here. So look for a bounce incoming. If we're looking at the daily RSI, it's almost completely reset. The 4-hour RSI has taken a bit of a double dip, and you're actually starting to see a bit of a bullish, actually not a bit, you are seeing a bullish divergence now on the 4-hour RSI, where we made lower prices and the 4-hour RSI is printing a higher low here. So that's a good sign for a turnaround incoming on CRWV. Okay, next request, QS. And just to recap from earlier request videos, I don't look at any of these stocks or research the fundamentals ahead of time. I'm just looking at the charts. So QS, QuantumScape Corporation, I imagine they do something in quantum computing and maybe had a breakthrough, or they're doing a treasury play. They're a failed quantum company and they had a treasury play with just this massive move. Let's compress the price action to see where they are coming from. And if you go to the weekly, you can see we had the band squeeze here. Whenever you see the bands squeezing like this, Bollinger Bands or the confluence model on IADSS, that's just telling you that volatility is incoming. And we have really fallen from grace in terms of where this was at one point with a blow off top at $132. So we're nowhere near that. To really get a read on this, honestly, I would have to research the news event a little bit to see if it is some kind of quantum breakthrough that warrants higher price targets. If this is just a treasury play, that's just running off. In German, they say Luft und Liebe, air and love, and that's going to run out at some point. But like I said with the other treasury plays that we covered last week, and I'm not saying this is a treasury play, I'm just saying moves like this, don't chase it. Because they will come back down to earth. And if you're buying right now at 14 and it even corrects halfway or down to 9 or these previous peaks at 7, you're going to be hurting. So it's not a good risk to reward setup to chase moves like this. The one thing I will say is that you are seeing increasing volume here, which is indicating that this could sustain just a little bit longer, but we are very overheated on the charts. My advice is don't chase. Wait for it to find its local top, come back down to earth, and then buy in a value zone where you're finding support and see if it can bounce away from there. We've done that with many of the Bitcoin treasury plays and have had 3 or 4 successful trades on those, but now is not the time to get in. If you are in this already, you could look at areas where you might start taking profit. And, if this is a treasury play, obviously these past levels don't apply quite as much, but I'd be looking overhead to these previous bottoms at 19 to $22. Let's see how that lines up with history. Let's say $17 to $22, somewhere in that range. If you're in it already, I would anticipate a little bit of a resistance. But again, I haven't done any research on this, and research would be helpful with an asset like this. Next request is the Smarter Web Company, which looks like it just recently had its IPO, and it is just consolidating right now. So this is very much a pattern of indecision where we've got a wedge forming like this, And unfortunately, these are very even patterns in terms of not really putting probabilities in the favor of a break one way or the other, because we are making higher lows, but we're also making lower highs. The good thing is, though, this is very close to making a decision. So if you're looking at making an entry on this and you want to play it long, you would want to see a break above this point and maybe a back test and then a move away. And if you break down from this, then you would know to watch out. And that doesn't mean it's over for the stock, but perhaps it just comes down and we find a base, maybe at these previous highs here at $2, and you get a much better entry, and then you form a base and move away. If that does happen, go back to some of the other assets we just covered that were forming a base like this, and you can see how they usually hit a level multiple times, and then you'll see a very subtle higher low, and that's an indicator for you to start paying attention. And then when you make that first higher high on that next pullback is a very great entry. Even going way back to Bitcoin at the bottom of the bear market, it did the same thing where people are saying, oh, Bitcoin's flatlined. No, it was forming a base for about 4 to 5 weeks, and it was telling you that it wasn't dropping anymore. And then you saw subtle signs of strength, like these subtle higher lows and then higher highs. So if you pay attention to something like that, that can get you a really great entry before a breakout. And you also want to marry that with increasing volume. Last requests are SAY and SUI, and in full disclosure, I am not in SAY. I missed this last run up and I'm looking for an entry. And a few days ago, I actually was talking to someone in one of my classes who was looking at about this overhead trend line, and we hadn't touched it yet. We were just a couple dollars away. And I said, watch this trend line for a rejection. And what do you know? We actually hit that trend line and rejected from it. And so now what I'm anticipating, the third time retest has the highest chance of rejection, and then the fourth time has the highest chance of breaking through. I'm not saying we're going to get all the way to the bottom of the range. Actually, most likely we would bounce here at the 200-day moving average and then try to break through, which is coming in at about 24 cents. So you can see I have that alert set there. We also have this high volume cluster at about 28 cents. So look for a pullback into that range. This touch point here was almost at 40 cents. So if you do a little bit of TA and you anticipate those rejections, you can get a far better entry. If we go to the daily just to sharpen this up, you can see that touch point there and the rejection. And now we just need to see where we find support to attempt breaking that overhead trend line down the line. And one thing I will say, those fourth time breakouts can be quite meaningful. So if you are looking for an entry on this one and you haven't gotten in, you could consider buying wherever this bounces. And then the other safer entry is playing this breakout. The only thing you want to make sure on those breakout plays to see if it can really have follow through is make sure that the charts aren't super overheated. So right now on the daily, this might be giving us our chance to reset. Maybe we get an entry in that high 20 cent to low 30 cent range, and then the charts will have a reset and this can go on to another move. Okay, and last one, which is SUI, and I do not own any SUI, full disclosure. And I'm just going to do the same thing here, draw overhead resistance, underside support, because it really seems like this was in a similar kind of wedge pattern. And right now, this has broken to the upside. We closed our weekly just above that resistance line. Now, ideally flipped into support. Actually, let's go into the daily to sharpen that up. Yep. Broke out, and we had 2 back tests of it. We also have the Confluence Model Cloud test there. So that's a good sign. And also, more broadly speaking, we are in this recovery, and we have our higher low here compared to down here. I guess you could say it was a higher low than this too. So higher low compared to that. And now we have another higher low right at our most traded zone. And we're breaking away, and we have yet to break these highs. So on this bounce, we want to see SUI make higher highs. But if you're looking to get into this and you're not in it right now, a back test of a breakout like this is a fairly good entry. We just want to see what the charts are doing. We are a little overheated on the daily, but this is crypto and we are in a bull run. The 4-hour is resetting a little bit. So you're not getting in at the best point, but this is a good invalidation. If you want to get in and see if it has more to run, you have your invalidation just underneath that trend line that you could put your stop loss at, and then you could try to get in at a lower support, maybe here at $3.25. So that's it for the charts. Keep your eyes on the crypto space for those weekly closes and get ready for more volatility in the week ahead. The percentages that we've been seeing names moving, this doesn't happen all the time. So this is really the time to focus and take advantage of the opportunities that the market is giving us. I'm honestly a bit overextended and a bit overtired. This last week, I've been tracking about 4 hours of sleep a night for the last actually 2 weeks, but I want to make hay now while the sun is shining, as the old saying goes, because I know market conditions may not be this favorable 6 or 9 months down the line. So stay alert and be ready to strike and take advantage of what the market is giving to us. Bye for now.